Did you know that Hong Kong has recently approved its first Bitcoin and Ether ETFs? Now that's a headline to perk up the ears of crypto enthusiasts around the globe. First, let me welcome you to our brand new channel. We aim to bring you the latest news in stocks, crypto, and macroeconomics. Back to the story. This approval is no small feat. It's a significant development that brings a new wave of opportunities for investors and reaffirms Hong Kong's position as a central hub for virtual assets. Hong Kong's securities regulator has given the green light to the in-kind creation model for Bitcoin and Ether ETFs. This model allows new ETF shares to be issued using Bitcoin and Ether rather than the traditional cash create redemption model used in the United States. This exciting news doesn't stop there. At least 3 local issuers have received conditional approval to launch spot Bitcoin and Ether ETFs. One of these lucky issuers will have OSL Digital Securities acting as a sub-custodian. Imagine the potential this brings to the table. This approval has opened up new asset allocation opportunities and reinforced Hong Kong's status as an international financial center and hub for virtual assets. And with that, we're just getting started. Stay tuned for more. But what exactly are ETFs, and what does the in-kind creation model mean? At its core, an ETF, or exchange-traded fund, is an investment vehicle that tracks the price of an asset or a group of assets. It's akin to a basket that can hold multiple types of investments such as stocks, bonds, or even cryptocurrencies like Bitcoin and Ether. But unlike individual stocks, ETFs can be bought and sold throughout the trading day, just like common stock, providing investors with greater flexibility. Now let's talk about the in-kind creation model. This is a unique characteristic of ETFs, and it's especially relevant when we discuss Bitcoin and Ether ETFs. In the traditional cash create redemption model used in the United States, new ETF shares are created or redeemed in exchange for cash. However, the in-kind creation model flips this process on its head. In this model, new ETF shares are issued using Bitcoin and Ether, the actual cryptocurrencies, instead of cash. This means that when an investor buys into a Bitcoin or Ether ETF, they are indirectly purchasing those cryptocurrencies. The ETF provider then holds these cryptocurrencies on behalf of the investor. This process is what makes these ETFs in-kind. The creation and redemption of ETF shares is done using the actual underlying assets, not cash. This model has several advantages. For one, it mitigates the risk of tracking error, which is the difference between the performance of the ETF and the performance of the underlying asset it's supposed to track. By using the actual cryptocurrencies to create and redeem shares, the ETF's performance is more directly tied to the performance of Bitcoin or Ether. Another advantage is that it provides investors with a more accessible way to gain exposure to cryptocurrencies. While buying and managing cryptocurrencies directly can be complex and risky, buying shares in an ETF is a more familiar process for many investors. The in-kind creation model allows for a more direct investment in cryptocurrencies, making these ETFs an attractive option for investors. So, what does this mean for the world of cryptocurrencies and investors? To put it plainly, it's a game changer. The approval of Bitcoin and Ether ETFs in Hong Kong doesn't just signal a step forward for the city, but for the entire world of cryptocurrency. As the first of its kind in the region, this move is set to provide new and exciting investment opportunities. It's a door swinging open, inviting investors to step into the world of virtual assets with greater ease and confidence. But the implications run deeper than that. The approval of these ETFs also cements Hong Kong's status as a key player in the global financial scene. This city isn't just a bustling hub of commerce and trade anymore. With this move, it's now a pioneer leading the charge in the adoption and integration of virtual assets into mainstream finance. Hong Kong's endorsement of the in-kind creation model is a testament to its progressive stance. By allowing new ETF shares to be issued using Bitcoin and Ether, instead of the cash create redemption model used elsewhere, it's demonstrating a willingness to fully embrace the potential of these virtual assets. And let's not forget the potential ripple effect this could have on the global cryptocurrency market. With Hong Kong leading the pack, other financial centers might just follow suit, opening up even more opportunities for investors worldwide. But what's most exciting is the promise this holds for the future. With each approval, with each new ETF, we're inching closer to a world where cryptocurrencies aren't just an alternative, but a norm. A world where virtual assets are as commonplace as stocks and bonds. This is indeed a significant move in the world of cryptocurrencies, paving the way for more opportunities and growth. Before we wrap up, let's take a moment to look forward. What does the future hold in light of these developments? Well, if the approval of Bitcoin and Ether ETFs is any indication, the future looks bright. We could see more ETFs being approved, more countries following Hong Kong's lead, and more opportunities for investors. And let's not forget the impact this could have on the cryptocurrencies themselves. As more investors get involved, we could see an increase in the value of Bitcoin, Ether, and other cryptocurrencies. So, whether you're an investor looking for new opportunities, a crypto enthusiast excited about the mainstream acceptance of virtual assets, or just someone curious about the financial world, there's plenty to look forward to. The world of cryptocurrencies is evolving, and we're all here to witness it. Thank you for joining us on this journey. If you found this video informative and want to keep up to date with the latest in stocks, crypto, and other macroeconomic events, please like and subscribe to our channel. We're excited to have you as part of our community. Until next time, stay rich.